Hello and welcome to Spark Accounting Solutions show. My name is Jennifer Quinn. I am the guest host on the show. We're going to talk about the 5 things small business owners can do to reduce the risk of employee theft. Now, that's a real concern for all business owners, and I'm excited to have on the show the CEO and founder of Spark Accounting Solutions, Julie Babcock. Hi, Julie. Welcome to the show.
Welcome. Good morning. I am excited to talk about this topic.
Well, I'm excited too. As I was reviewing the notes for the show, I was like, who knew? Who knew, right? The ways that you can actually, and there's simple, actionable steps.
Absolutely. It is. Yeah. There are a lot of easy things that you can do to try to prevent employee theft, and it's such a big deal. People don't realize how pervasive this problem is. Every year in the U.S., about $50 billion is lost to employee theft. $50 billion.
Wow.
It's crazy. Now, If you had to guess what percentage of small businesses have actually lost money to employee theft, what percentage would you guess have admitted to that?
Oh, what percentage have admitted to it? Okay, that changes it a little bit because I would say 100% have experienced it, but I would say 67%.
That is actually correct. About 2/3 of small businesses.
What? Stop it. That's my tweet. Just like I cheated, but that wasn't in the show notes.
Well, it gets even better because employees. How many employees do you think have stolen from an employer at least one time?
Okay, now just to clarify, are we talking about something as simple as even a pen?
I don't know how they defined it in the study. So.
Okay. How many have admitted to it?
I guess they would have to have admitted to it because they wouldn't have a statistic otherwise.
You probably thought this was just going to be an easy answer, but I'm like, I got to get this right. Okay, so I would say less than 50% would say that they did it.
That is wrong. It's 75% of employees have admitted to taking at least one thing from their employer.
Wow.
One time. And it just brings you a whole new, when you look at your team and you say, do I trust these people? We all want to say, as small business owners, we always say, yes, none of our people would ever take anything from us. Right. None of our people would ever steal from us. But once you know the statistics that 3 out of 4 employees have stolen at least once, it changes a new perspective and it kind of makes you realize, hey, this thing that I don't have time for, which is protecting my assets,
right?
I need to start focusing a little bit of time on that.
Absolutely. Yeah, for sure. Wow. Okay, well, let's go ahead and get started on the 5 things small business owners can do to reduce the risk of employee theft. Shall we?
Let's do it.
Number 1, we'll just throw that on the screen right now. Segregation of duties. What does this look like and how does it help?
Okay, so we're gonna focus on cash mostly today, but there are other ways that employees can steal money, obviously. But I want to talk about segregation of duties. A lot of small business owners have one person that reconciles their bank account, one person that pays their bills, one person that does online bill pay. They do everything, and when you start to think about the amount of power and control that they have over your cash, it's frightening. They could very easily. And I've seen it happen in businesses where they've actually written a check to themselves and then they've changed the accounting records to show that it was actually paid to somebody else. And so the business owner, just by looking at the financials, doesn't know that it happened. But this person has been able to do the whole thing. They've also had the check stock, so they could take that check stock, write a check to themselves, forge the owner's name, cash the check, reconcile the bank account, change the records, and the small business owner has no idea that it's happened.
Amazing.
So it's really important to use some of the new technology that's available these days. Checks are probably one of the least secure ways to pay your vendors. And there's all kinds of great new apps out there that you can pay bills through that will allow your bookkeeper to process the vendor bill, get it set up for payment, and then all you have to do is go and do the final approve button. And it's easy. It takes the work. The work still stays with your bookkeeper primarily, but it doesn't but you have the final approval, which is a good thing.
So what are some of the examples of those software programs that do that?
Yeah. So one of them is Bill.com. Bill.com is well known. There's another one out there called Pluto. But some of the banks even have this built in. Like the bank that I bank with, you can actually set up a sub user, they call it, and that person can go in and just set up the bills within the bank, and then I can go in and approve them. So your bank may even have tools to do this easily.
Oh, very nice. Okay, very good. Okay, so segregation of duties.
I want to say one other thing on that really
quick.
Ahead. A lot of people, when they're using an outside accountant or an outside bookkeeper, they don't think twice about handing out their bank login information. Right. And I want you to know that bookkeepers and accountants, in addition to employees, sometimes they steal too. In fact, Rihanna has a whole song, a very, very angry song about money.
Really?
Somebody stole her money, and it was her accountant. And she actually has a whole song about it.
Wow. Okay. So how do you prevent that?
Honestly, you need to be looking for banks where they have that whole sub-user idea, or they have read-only users, so that your accountant, your bookkeepers, your employees can get the information they need, do the tasks you need them to do without full control over your cash.
Okay. All right. All right. That's great. That's great. Are we ready to move on to number 2?
I am ready now.
Okay. So this is one that seems like one of those tasks as a small business owner, you're like, really, do I have to do that every single month? But I want to hear why it's so important. And that is review your bank statement.
So a lot of small business owners will do a lot of pushback on the segregation of duties thing, because they'll say, you know what, it's just me and one person and I can't do everything. And so what I really encourage people to do is, at the very minimum, have your bank statement delivered to your home or delivered directly to your office. Make sure you get there and you open that bank statement up before anybody else does. Go through, look at the bank statement, look and see if there's anything unusual happening on there. And also look at the canceled checks and make sure that those are all your signatures. That right there is a good way to catch if somebody is, forging your name or doing something unusual on your bank account. But it's also a really good way to just let your employees know that you're looking. Sometimes just knowing that somebody really has oversight over what's happening with the money is enough of a deterrent that you don't have to. I still recommend full segregation of duties, but definitely take a look at that bank statement and see what's going on there.
Well, and that makes sense. And a good example of that is, how many of us, when we see a police officer on the side of the road, suddenly we're slowing down because we're like, oh, they're watching, So yes. Let them know you're watching. I want to give a shout out to Richard, who is watching, speaking of watching. And he adds, owners, always open the mail yourself.
Yes, I agree completely.
Yeah, totally. Anyway, thanks for joining, Richard. And if you're also watching and you'd like a shout out, go ahead and leave a comment. Tell us where you're watching from, or leave a question. If we don't get to it on the show, Julie will come right back in and answer any questions that you might have.
Absolutely.
Okay. All right. So what else do we need to know about reviewing your bank statement?
The big thing is just do it. And if you need to take it to, if you need to have it delivered to your home, I would suggest that too, because then you're going to be the first one to open it.
Wow. See, here's why you've got to have professionals in your life to know these things. I would have never thought of these things. Okay, good to know. All right. So this one, I can't wait to hear why this is important to reduce the risk of employee theft. But this one is number 3, require employees to take a vacation. Why is that important?
Generally speaking, if somebody's doing something sneaky, they have to keep doing whatever that is to cover it up. So for example, one of the ways that people will steal money sometimes is let's say you work for somebody like Cable One, and let's say 50% of your customers are paying $49.50 for their service every month. Well, that employee can take one of those checks for $49.50 and put it in their pocket and cash it themselves. And the next check for $49.50, they apply to that customer. And so they've stolen one customer's payment, but they're just going to keep applying they're still going to apply a payment. They're just going to apply the next customer's payment to their account. And so there's a whole thing that they have to keep up with, right? Because they're always off by one person.
Wow.
And so if they go on vacation, they either have to tell the person behind them that they are doing this,
right?
Or it's going to blow up because somebody's payment's not going to get posted to their account. And I don't know about you, if all of a sudden my Cable One bill is $90, or, is $90 instead of $45, I'm like, didn't I pay that?
Right.
I swear I paid that.
Right.
And then I'm on the phone saying, hey, I paid that. And then suddenly somebody finds out that somebody's been messing with the money. And so if you force employees to go on vacation, if they are doing something shady, the chances that that's going to get caught while they're gone is pretty good. Somebody's going to see it because somebody's got to cover their tasks.
Somebody's got to cover it. That's fascinating. Okay. But you're also making a point as a consumer why it's better to do electronic payments as well, right?
Exactly. Anytime we can, again, take checks out of the mix, checks have a much higher rate of having problems with them, whether that is, I've seen companies where paychecks go out and then somebody will either, wash the paychecks, put in new amounts and cash them again, or they will make new checks with those same numbers on it and cash those fake checks. So anytime you can avoid having your numbers floating around is a good idea. And anytime things can get automatically posted to your account, it's a great idea too.
This is fascinating. This is a whole different world, like thinking one step ahead of people who are, and we could probably talk all day of why do people do this, but that's not what the show's about. Let's get on to number 4.
Perfect.
Watch for tip-offs in employee behavior. What would those look like?
So anytime everybody knows how much they pay their employees, right? So you kind of have an idea of what kind of lifestyle people can afford. So if all of a sudden one of your employees has a brand new car every 6 months or is taking some extravagant trips regularly and, their great uncle didn't just pass away and leave them a bunch of money, you can start to question and say something is unusual. This person's lifestyle doesn't match their salary. What's going on? And so look for that and kind of explore what is going on with that employee and see if you need to look into it further and dig into why that money is there for them.
Yeah, that's amazing. So have you actually seen that happen? Not necessarily in your business, but in some of your clients' business?
I have seen situations where I have seen several situations where there have been employees that have stolen money that we have come in after the fact to try to help figure out what has happened. And yeah, there were Hawaii trips. There were new expensive toys. There were some of these things that you could, if you knew what to look for and you knew what that employee's salary was, you would start to question, I don't know how they can afford that.
Suddenly, my comment at the beginning of, you mean taking a pen, seems pretty irrelevant.
Yeah. I mean, when you think about that $50 billion a year,
right?
That's not when you think about how many pens that would be, I don't think we're worried about the pens, but even those little amounts over time can really add up and people don't necessarily notice them.
Well, sure. And we would hope that everybody has, the same value system that we have and the integrity, but that's just not the case. We're human beings living with human beings. And, these are important things. Okay. So watch for tip-offs in employee behavior. If you're just joining us, we are, talking to Julie Babcock-Hyde. She is a CPA, a QuickBooks Pro advisor, a Profit First professional. She's the owner and founder of Spark Accounting Solutions. We're talking about 5 things small business owners can do to reduce the risk of employee theft. And if you know any small business owners, go ahead and share this video with them because, I've been a small business owner for 10 years and I've never heard any of these tips. So it's very useful information. What we've covered so far, let's just do a quick rundown. We've talked about segregation of duties. We've talked about review your bank statement yourself. And as Richard pointed out, open your own mail, business owners. Require employees to take a vacation. Watch for tip-offs in employee behavior. And now we're going to go to number 5 and spoiler alert, there is also a bonus. So let's go to number 5, and that is give customers a reward for not receiving a receipt. Now, we've all seen this, right? If you didn't get a receipt, yeah,
let us know when you get your meal for free. Well, the reason that, and we see this a lot of time at restaurants where people are paying cash for small items, right?
Right.
And so if you go to a restaurant and you'll see that sign, the reason they are literally doing that is so that their employee doesn't just take that money and put it in their apron pocket or put it in their pocket. That is exactly why that they're doing it, because if that sale never gets rung up, they don't know that the money's missing.
Makes sense.
They won't know about it until there is an inventory problem. They don't have enough inventory for what they should have.
Yeah.
So absolutely, it's an easy way to do it, but that's why they do it. We see it all the time. I used to always smile when I was at the mall when I was back in school, and we learned this control over cash, because I'm like, oh, I know why they're doing that. And it's to make sure that you don't steal this money. So it's an easy trick, because now if somebody has to, somebody has a fit because they don't have a receipt, now all of a sudden the manager's got to come over, and now the manager's going to know that this person likely pocketed that money. And again, it's both, it's a deterrent. It's a deterrent for the behavior.
Yes, for sure.
And so there's different kinds of controls. There's controls that help prevent things, and sometimes there's controls that help catch things. Reviewing your bank statement is primarily to catch things, but it's also a little bit of a deterrent. Requiring this receipt is to catch things, but it's also a little bit of a deterrent because the person knows that that's being watched.
Yeah, it makes perfect sense. Wow. Okay. So now we're going to do the same thing that you did. Now that we have this information, every time I see them, I'm going to go,
Exactly.
Okay. And our bonus tip is maintain strict inventory controls.
So I want to talk about that a little bit, because you want to make sure that if you are selling goods, you're selling products, that you really track how much inventory you have on hand, and how much inventory you should have on hand. There's a problem a lot of times in let's take the bar industry, where people will pour more drinks than they should.
Mm-hmm.
Or give away free drinks. And if they're actually counting how much did I sell? How many ounces should I have sold? How many ounces should I have left? They can actually track that. The same thing with product inventory. If you're looking at, how come there's only control tags on some things at Walmart and not others? Well, they're trying to make sure they keep inventory controls over their biggest items, so that those biggest, most expensive items are not walking out the door. And so sometimes that's just a matter of making sure people know the standards. Sure. Sometimes that's a matter of putting protection on the items themselves, whether that's things that beeps, whether that's the control tags that blow out blue ink when you pull that off the clothes that you've stolen, so you can't actually return them for cash back. And sometimes it's just really setting standards about how much product goes into your ingredients. Example, back a long time ago, one of my first jobs was at Pizza Hut. And when we cooked, we knew exactly how many slices of pepperoni were supposed to go on a pepperoni pizza. And they did too. And it helped them track inventory and make sure that we were not either over delivering to people or giving stuff away for free, because they knew how much should be gone, because they knew exactly how many pieces of pizza were sold and how many pieces of pepperoni should have been on it.
Eating it yourself, one for the pizza, one for me, one for the pizza.
Exactly.
And
snack.
Hearing you say this makes me feel so bad. Like, a lot of this is just educating your employees. When I was in high school, I worked at Arthur Treacher's Fish and Chips, and my job was to set up the salad bar every morning. And there's so many layers of this being wrong that I just didn't know. But as I was setting it up, I'd grab stuff and eat it for breakfast, Yeah. And I'd grab green pepper, but I just didn't realize inventory control. So there's also a responsibility on the part of the employer to educate, right?
Right. Absolutely. And I think I think one of the things that we don't get a lot of education around this area, most small business owners haven't been taught this stuff, and they don't really know how to put controls in place to protect their assets. And so I think that's important, because this is just a very small sample of controls that you can put in place to protect yourself.
All right, Julie, this is awesome. Do you have anything else to add to this topic? 5 things small business owners can do to reduce the risk of employee theft.
I think my last addition would just be, if you've got questions about ways to do that in your own business, feel free to post them, ask questions about things. There are a lot of different industries that have a lot of different issues that they're tackling. And if we've got a tip for you, we'll be happy to share it.
Perfect. And what's the best way for someone to reach out to you personally if they would like to do that?
If you want to talk to me, right on my Facebook page, there's a contact us button. Click that, give me your information, and we will get a call with you.
Perfect. Awesome. Thank you so much, Julie. And thank you all for watching. Again, if you know any small business owners, go ahead and share this out so that they can get this information as well. And with that, we are out on behalf of Spark Accounting Solutions. Have a fabulous weekend and make it a great day.